Hi everyone. Today, HDIN Research is pleased to present a comprehensive strategic analysis of the global phenol acetone value chain. As the petrochemical landscape shifts toward massive capacity integration in Asia, understanding the interplay between feedstocks and downstream derivatives has never been more critical for stakeholders. Let's begin with the architecture. The phenol acetone chain is a textbook example of high-value integration. We see a direct flow from basic upstream commodities like benzene and propylene through the cumene intermediate. A key strategic takeaway here is the joint production nature of the process. For every ton of phenol produced, we get approximately 0.6 tons of acetone. This fixed ratio defines the supply-side logic of the entire industry. Upstream stability is the backbone of this industry. With global benzene capacity at 86 million tons and propylene nearing 190 million, the constraint is rarely feedstock availability. Instead, the focus for producers is now on cost curve positioning and logistical efficiency in moving these massive volumes to midstream units. Moving into the midstream, let's examine where the world's production power is currently concentrated. The geographic shift is undeniable. China has rapidly ascended to become the global epicenter, now commanding over 6 million tons of capacity. While the West remains stable, the aggressive expansion in the East has fundamentally altered global trade flows, turning traditional importers into self-sufficient powerhouses. The competitive landscape is dominated by heavyweights. While INEOS remains the global leader in terms of sheer footprint, we are seeing the rise of mega-refinery integrated players like ZPC and Formosa. These companies leverage massive scale and upstream integration to maintain margins even in low-cycle environments. To understand the future of phenol, we must look at its primary engines, bisphenol A and polycarbonate. BPA remains the most critical derivative. Our research shows a clear trend toward the ion exchange resin process due to its environmental and efficiency benefits. Market leadership is bifurcated between global incumbents like Covestro and Sabic and rapidly scaling Asian Tier 2 players who are chasing vertical integration. Polycarbonate is the growth darling of the chain, but it faces a challenge: oversupply. As shown in our trend analysis, China's capacity has more than doubled since 2020. This transition from a net importer to a net exporter is currently depressing global utilization rates and forcing higher-cost plants in Europe and North America to reconsider their positions. Acetone, often viewed as the minor joint product, has its own complex ecosystem. The MMA market is in transition. IPA is seeing a shift in production routes toward acetone hydrogenation in certain regions, and MIBK is currently grappling with a severe supply glut that has significantly impacted pricing. In the MMA space, vertical integration is the key to survival. Leading firms like Rome and Mitsubishi Chemical are not just selling chemicals. They are managing a complete value chain down to PMMA resins and sheets. For new entrants, entering at the monomer level without downstream captives is becoming increasingly risky. In summary, HDIN Research identifies 4 critical themes for 2025. First, the industry must navigate a period of severe overcapacity. Second, the technological shift away from ACH-based MMA will continue. Third, the concentration of the hub in Asia creates both opportunity and systemic risk. Finally, vertical integration is no longer an option. It is a prerequisite for long-term profitability. Thank you for your time today. This presentation is a selected content of our findings. If your organization requires deep-dive market intelligence, custom datasets, or localized feasibility studies, the team at HDIN Research is ready to assist. Please reach out to us at sales@hdinresearch.com. We now open the floor for any questions.